Hi, welcome to the Market Alert for Tuesday, the 1st of December 2015. So, 15 days before the Fed decides whether to increase, decrease, or leave interest rates on hold. The consensus seems to be they're going to increase, and that's fine by me. Feel free, Yellen, to increase the interest rates because that will bring some volatility to the markets, which will be great for us. It's a suicidal or financially suicidal tactic, in my opinion, because of the derivatives that are sitting in the background, 1.25 quadrillion of them. And but there you go. We are being led down the garden path by the central banks. They keep printing money. It's a massive experiment. And now they're trying to normalise by increasing interest rates. And of course, this is having an impact on the market, as you can see from yesterday. And it's going to be like this for a while as well. So I'm warning you now that we will see this sort of thing we saw yesterday, this trading range. There are a few more economic news items to be released this week that should lend a bit more volatility. But believe me, we've never been here before in the history of trading. We have got 15 days waiting for the Fed to see whether they're going to increase interest rates or not. It's going to be an absolute pain. So I'm letting you know that in advance. After, it will be fantastic because even if the Fed don't raise rates, they will lose all credibility. So you've just got to be patient through this next couple of weeks as we head towards the 16th of December. There's nothing we can do about it. Everybody who trades is in the same situation as well with regards to waiting to see what the Fed is going to do. So I'm just letting you know. So yesterday we see the market drop sharply on the open, the bars, very wide range, and then eventually it became quiet. And then we had a sell signal just on the cusp of the going into the quiet period. Now, in this situation, you can either take the trade or not take the trade. The choice is entirely up to you. But you can see there the market became quiet. But what was interesting is that prices actually traded close within the scalp. We came down about 19 points. Then the market started to trade sideways. So you had the opportunity to actually consider taking it off the table, because notoriously between 4:30 and 6:30 the market is quiet, which you can see there it is, and the market bouncing back and then coming back to break even here as well. So a signal on the cusp of going into the quiet area can either be ignored, or if taken, then consider locking in the profits, or worst case, break even. See if the market's gone through there, come back and take the profits at a break even. This spike up here is the IMF giving the yuan a reserve status, and that's what sent the market back up to the psychological level there of 17,800. And then late on in the session at 8 p.m. we had the same picture again. You can see the market coming down, trading down 18 points, and then stopping and then getting into this choppy sideways move. You'll also again see the chance here to have taken profits off the table before the market actually closed as well. So what looks bad on the screen there isn't as bad as it looks, because there was 19 points here going into the quiet session. And again, you have to apply some common sense and logic. If the market's going to be sideways, I mean, it was already sideways through here before it actually broke. And given that backdrop of the waiting for the Federal Reserve to see what they're going to do on rates, the market could be fairly quiet. Now this is even more amplified when we look at the daily chart. You can see now for the last what have we got here, 1 2 3 4 5 6 7 8 trading days, the market is stuck in a range of let me just mark up this for you so you can see this defined channel that we've got. We'll go from there. So from 17,728 up to 17,915, this market is stuck in a sideways range, and it's likely to continue unless something happens of a geopolitical nature until that 16th of December, or after the 16th of December meeting. We do have the non-farm payroll figures out this week. I think it's on Friday. And that one is going to be a determining factor as well of whether the Fed will use this to increase or decrease rates. But we've never been here before. Like I say, in 20 odd years of trading, this is new to me as it is to you. And I'm trying to second guess what's likely to happen, which is very difficult. As I say, it's an unprecedented situation. So today, what have we got? Let's have a look. We've got the bank stress test results. They're out for the UK at 7 a.m, so they're going to be out shortly. Let's have a look later on this afternoon, see what we've got. Carney speaking at 9 a.m. And this is another thing you're going to see as well. A lot of central bankers being wheeled out to keep this Ponzi scheme alive as well. In fact, we've got Evans out as well at 5:45 this evening. 3 p.m. we've got ISM manufacturing as well. That's forecast more or less the same. Yesterday's economic news was poor as well, came out lower than forecast, but they're still looking to raise rates. It doesn't make any sense at all. So nothing to affect the markets in the apart from the manufacturing PMI. You might not want to be in the market at that time. That's a high impact news item. The market will be in the quiet period at 5:45 as well. But again, just to remind you, the market fairly quiet. And in the implied volatility, 1382 for Monday. And we've got a situation where the yellow is above the blue, which is what we want to see for some downside pressure. The crossing of these lines again will show the market breaking to the upside, but at the moment stuck in this sideways range. Again, you can see this as well. A little bit of a spike 2 weeks ago round by the Paris attacks there, but since then the market sideways. Right, that's it for this morning. Again, just to conclude and remind you that this is an unprecedented situation where we've got 16 days now, or 15 days, for the market waiting for the Fed to decide what to do. And again, I will do my best to try and sort of preempt what's likely to happen with regards to price activity up to this point. Right, that's it from me. See you in the next one. Thanks for watching.